Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week get everything you need to know in 90 seconds at 9 o'clock, with news the world's economies are in quite variable shape, and fortunately, New Zealand is in the group doing quite well at present. In Japan, their January PMIs aren't showing any real improvement, even if there are some positives. They recorded a faster deterioration in business activity in January. Demand weakened further as new business inflows contracted for the 12th successive month, weighed down by a further fall in export sales. That said, new orders in manufacturing recorded an expansion for the first time in 2 years. Things are also not positive for the EU or the UK. In the EU, business activity fell at an accelerated rate as companies continued to struggle amid the pandemic restrictions. The rate of factory output growth weakened to its slowest since the recovery began, and the service sector saw output fall at the second fastest rate since May. Even by those dour standards, it is worse in the UK. However, the internationally benchmarked PMI for Australia recorded a continuing healthy expansion, and the Aussie rural sector is having a bumper season, especially for wheat and beef. They've been aided on the price front by growing season struggles in other parts of the world. Meanwhile, China's attempt to pressure them with trade restrictions seems to be coming to naught. But the Aussie retail sales data for December was actually disappointing, down 4.2% on a seasonally adjusted basis from November. However, despite that dip, it is still more than 9% higher than for December 2019. Like New Zealand, these retail gains are coming on the back of closed borders, with the locals unable to holiday overseas. That spending is happening locally now. It is a global effect. $85 billion has been redirected this way from travel services to consumer goods, which is the real reason behind the recovery in many factories and the stresses in container shipping. American factory activity picked up in January as well, built on higher new orders, and a feature is rising producer inflation. From China to Japan to India to the US, car makers are raising prices as electronic chip makers do the same to them, as a worldwide shortage spreads from these items at the heart of almost every machine now. Spreading tech may have been the basis of low inflation in the past decade or so, but surprisingly it may now kick off a new round of inflation in this next decade. US Treasury 10-year yield will start today unchanged at 1.09%, and the price of gold will start up $2 today at $1,856 an ounce. Oil prices are just a little softer today at just under $52 a barrel in the US, while the international price is just under $55 a barrel. And the Kiwi dollar will open where it left off on Saturday at just under 71.8 US cents. Against the Australian dollar, we're marginally firm at 93.1 Australian cents, and against the euro, we're unchanged at 59 euro cents. That means our trade-weighted index is still at 73.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.